Howdy, y'all. Good morning. Good morning, friends. Market opening already rashing out the bands. Waking up to already another lovely, crazy day. Fire still in the road. I get out there. I posted this on Twitter. Of course, we know this in our Discord as well. You guys know. You know the rule. All right, monthly hatch pressure. What up, friends? Good morning. Good morning. The final countdown. Oh man, it's been like such a crazy weekend. I've lost most of my voice, but I'm gonna try and muster up enough to have a conversation with you guys. Y'all know the rules. You know the rules I got. We talked about last night. There's blood on the streets. MHP, that key pivot right there. Hold on, let me put on the... I kind of do want to put on a little music today. Oh, sorry, not that. That one. I'm going to turn it down, though. You know the rules. Just like, you know, one bite, everyone knows the rules for the pizza thing. Well, one set of rules, everyone knows the rules. Right? Make or break was 58.63 on the S&P, this MHP. So we opened like right at that number, actually. Let me see if we actually opened below it. We opened above it and broke. Yeah, so when you break to the downside, that's bad. As a DDVM, we always talk about it's a 4% experience, 8% experience on the downside. I don't trade 8% zones usually down here, so out the door already. I do not short down in here. I look for long pivots only, as 88% of days do tuck in inside of the middle two bands. We are in low probability zone right now. S&P is not as bad as Nasdaq is. Nasdaq slightly worse. Nasdaq cleanly outside the bands. So yeah. Trade debate is still down. Trade debate's down? No way. So we're going to chill today, right? Let the market do its thing. Let the market sell. Like I said, what's neat about what you watch me guys do, you guys watch me trade a lot. You don't see me doing much in this environment, right? You see me, well, I took a small stab at a long, didn't work out, close it. But you guys know, market's collapsing out. You know me, I'm smart, I'm sitting on the sidelines. I'm really good at detecting when that crashes over and the market's selling off. There will be a time to trade. There'll be some good bull setups along the way. Let me show you the S&P really quick. So in general, and these are all my notes for my yellow lines here. In general, right, the market has just been nosediving since I came back and made my post. The bear market is bearish, right? And then I said here we had a confirmation it was back. We had some bull hope here, and then all three signals lined up to being bearish at the end of yesterday. We talked about that, or in the Friday. and we're back to it, right? The market is just continuing to fall. The greater market signals of rock scooter are hands down the best there are for seeing this stuff. I'm safely on the sidelines. The market will bottom at some point. I have all my money to long it when it does, baby. Right now, no hero. I'm reading some of my friends on Twitter. My friend Rial said something really cool. He basically said, you know, don't jeopardize the soul. I don't know if you guys know Trader Rial. He's an awesome dude. So don't jeopardize the soul of your strategy for one win. I was like, oh, it's so powerful to read that this morning. You know what I mean? The market's not worth like bagging and chasing down a single win. You got a strategy. My strategy is like sit out when you need to, do all the right things. Trader Rial, let me send you his thing. Let's see if I can know his actual Twitter. There you go. This guy right here. He has a buddy. He's good. Okay. Good stuff. Looks like we filled a downside gap on the S&P. Today, bear long down. All setup is bearish. So keep in mind, above here, DD ratio less than half. We know that there's a setup. Any upward movement to here is resistance trade to there. Any down here is down. Since there are no strong long pivots to long off of except for MHP. So with that being said, take note that the DD band is actually right here as well. So not that I'm coming in here trying to short this. Let me show you where kind of some of my rules are all lining up. I'm deciding if I do want to do anything. The top of this 1 minute candle right now. DD band is literally right here on the edge. Right there. So my rules are, and again, you know, don't sacrifice your strategy, the soul. That's such a good, let me read it to you exactly what he said. He goes, don't sacrifice the soul of your trading system for one victory. Trust the process. That was such a powerful thing. So down here below DD bands, the only thing I do is long. I don't short down here. If the market, I only long off a strong pivot. This qualifies as a strong pivot only back to DD band. So this is only like 10 points worth of work, maybe worth it or not. The resilience numbers are negative, which means this is also resistance here. So any upside movement, today's perfect setup today is a short. And I love these kind of shorts because I love to short here off of that. The bear long down is an excellent short. So anything inside of here, it's not worth trying to long. I would long from here to here and that's it. And I don't think I want to take it. But this to the halfway point, which is really far down here. 570, 580. So that's 575. So yeah, so today there's going to be some volatility. So today's setups today. This is kind of the middle of the range. If it trickles up, there's resistance because res. There's big resistance because of here. This goes all the way to there. These are perfect setups for me to want to maybe attempt a small short on. And I tell you, there are times to short. This may be one of them. I'm not shorting here or here, here, here. As long as long setups don't have any upward pressure on the flow, so I'm not taking anything long. MHP long, I'm debatably not going to do it. Bear long down on Qs, same situation here. Like I said, there might be a little bit of upward movement, but with Qs, again, we have our DD band is roughly right here, give or take. So again, downside, I only long on strong pivots. Up, I don't short outside the band, so my rules are no shorting. This is Nasdaq futures. That does not short on the outside of the bands because only 8% of days stay down here. 92% of days will stay above the lower band. So I don't short down in here, and I long off of strong pivots only. This does not qualify as a strong pivot. This one does, but we're below that, and below there, there's just pressure to there. Even though, so basically, this is bad. Today could nuke. So no back holding today for me. Let this market shit on itself. Let it go, baby. Don't forget to hit that like button down below. Everyone, bottom right. If you like this free knowledge bombs, I stream every single day. We used to Zoom call private for people, but we're gonna do it free for the public. You guys don't forget to hit the like button. Give us some cred. This is the best stream you'll ever watch. I have such a grasp on the market. My rules are solid. I don't do anything. So I've got no qualifying trades today. I could do something here if I wanted to. But again, my long strong pivot always goes back to DD band. So basically my hands are tied. The only tradable range I have is this guy right there. There is pressure off of there, but I still don't take the short, even though it's likely to do this and likely to collapse today. I still don't do it just because low probability zone. Stats are against it. So since I know it's likely going to fall, no longs. Inside of here, all liquidity maps are down. Pretty bad. Let's analyze the VIX as well. We did in the morning. So S&P, NASDAQ both have that downward push. I don't know if you guys are trading this or not. But hopefully, you know, you're onto something. VVIX opening at 122. Tell you, we can see this thing from a mile away. I don't know who out there. I made it, you know. I made a pretty clean set of comments on over the weekend that, you know, I was watching last Thursday and Friday. People trading that news. Half the people were like, look how much money I made. I made 50K. Half the people are like, holy crap, I lost 50K. All your favorite streamers, YouTubers, up, down, up, down. People busted all their accounts. People blew up all their accounts. People made money in all their accounts. It's a coin flip. Don't let anybody tell you if they trade through FOMC or trade through CPI or trade through non-farms and they get it right, that they got something special in their back pocket. They bullshit. They gambled the right way and rolled the dice the right way. For every person that blew up their account or made $100,000 in that trade, as many people blew up, your guru's gonna be pretty quiet. But the trick is to know the kind of market you're in and lose zero. My volume is low because Matt is low. Matt's got a flu again. I got sick a second time, and this time it's all throat. Last time it was lungs. This time it's throat, so my vocal cords are like completely shot. Let me see if I can turn this bad boy up a little bit. Turn her up. Give me a little more volume here. Yep. This is the mode only trade eval. So any VVIX above 100, your market's just going to be unusually volatile and really hard to manage. I usually, if you're doing any kind of trailing drawdown account, the rule of thumb we teach is that if you're doing anything with the trailing drawdown and you somehow dare to want to trade your SIM-funded accounts that have trailing drawdowns, right? Drawdowns that fail you, or that trail you, to squeeze. When VVIX is above 100, you're going to hit drawdown limits on a daily basis, even if you're right on the trade. S&P went up 10 points down to it's volatile. So you can predict that the volatility is all over the place. You're not going to see smooth trending moves or nice like trend line falls or whatever. You're going to see the market unpredictably choppy. So that's that rule. VIX is just flying up. VIX futures at 20. I mean, it's not really, really, really bad yet, but it's still growing. And so, you know, VIX under 20 is still decent. It's manageable. So we're not having the S&P like hit circuit breakers or anything. There's still a little bit of liquidity here, but the selling's not over yet. So what I like to do in this kind of environment, instead of trying to scalp a short as markets are coming down, I'm always waiting for my good bull signal to push up to the upside. Now, again, the best thing to do in a bear market, I always teach people this, is just to wait. There's no glory in like getting right on short trades or chasing momentum or trading chop that's doing this. I hate it. What I do is I wait for the market to present a bull case above here, and then I'll take that breakout long for a nice cleanup day if we get it. So what I like to do is keep all my money in my pocket, and if we break up here, I'm going to hit it with all my PAs on the long side. You got sick as well? Oh yeah, dude, I got like a second flu. It was crazy. Boys, is another crappy day. But hey, you know what's cool? The pros will tell you, you know, there's a strategy has boundaries. And my strategy is very defined boundaries. You don't see me out here losing money. But I know shit sucks. But whenever we get back to bull market, you've seen me trade for years and years and years. And one of my YouTube's sprees in 2020, I won a 75-day winning streak. 70 days, something like that. 70 days. I always ask people how many days. They always say between 70 and 75. It was like 70 days. Didn't lose a single day. No, not one red day. Some markets, my strategy is flawless, and right, some markets, my strategy is not that good, and this is a market where I know things aren't that good, and so I just choose to sit out. Apex is down. Oh, well, never mind. I can just point and grunt. Okay. VIX is in a bullish liquidity map, which is showing, increasing in the VIX. Bull support this way is always here, here, that way. Now, again, keeping an eye on resilience number on S&P is positive. That's a gap fill predictor. So the S&P does have some upward pressure today, although there's nothing on it that I went along. Resilience does not override these irrational signals, but there is a possibility that because the stocks are moving up a little bit, that the S&P does have movement this way. But res negative 0 or less than 0 is fully resistance from there. Okay, so very much resistance from there. D ratio is less than half. I always short from there. When it's right on the edge, I have a choice to either chase the long or I can choose the coin flip. This is bearish enough. There's a short from the top. So today we're still coming down. So I like to wake up every day and just analyze the market and decide, hey, fuck this market, I'm done. You never seen DD below 30, right? So we're back to being in a bear market. So I told you guys, when y'all watch me trade, there's different ways to trade. A bear market and a bull market is completely different. And in a bear market, I'm very careful when I do apply the short. But do you guys understand? One of the best tricks in the world to trading is to not trade when you don't have to. That is the difference between me and a lot of you. You know what I'm going to do? I'm going to keep grinding out skins in Call of Duty, baby. I just hit platinum over the weekend. I ain't been doing no trading. Fuck that. I'm trying to get crimson this week. Leveling up. People said Apex is down, so I'm not sure. I'm not doing any trades though, so I don't know. Live through the crappy days so you can run out the bull days. That's it. Aaron nailed it. And I know there's like, you're going to watch people out there trying to muscle through this market. The smartest thing you could ever do is wait. There will be a time when it's a good hit. Again, S&P's got a little oomph to it. Res greater than 0. The S&P does have pressure to push this way, at least half gap. So remember, resilience greater than 0 does want to fill the gap. Let's see what news we have this week. Like I said, no shorting below the bands. For that reason, I don't short. So it's kind of neat that like all my safeties are there. The market's likely to move higher and then find resistance to sell. But again, I don't wake up and just decide to short these things. Okay. What news do we have? CPI this week, right? So let's see where we're gonna get a catalyst or an event that can get us a big reversal this week. CPI or PPI tomorrow. Okay. CPI Wednesday. So it'll be a big week. Retail sales. Yeah, it's a huge week. Oh my God. So we know the market's sensitive to the catalyst, like in the state of the VIX, right? So the market's just gonna like love these events. So I'm gonna tell you, CPI and all these other ones, the market's gonna just basically be like you're gonna days like this. It's in that environment again. The whole VVIX thing, we talk about that. Sensitive to the catalyst. Gambling into these events is gonna be very hard to do. So any questions about what I'm looking at today? Like I said, S&P is finding a little bit of pressure to the upside, which is good. At that half gap, there is resistance if res is less than 0. S&P is not less than 0. NASDAQ is. So NASDAQ, again, is going to be the reason it doesn't push hard. NASDAQ is likely to fight off that. NASDAQ is still pretty bad. So if I were to take a guess today, this upward pop right to here is pressure back down. Now, again, I don't short below the bands, so I'm kind of at a standstill. There's pressure this way. I don't short below the bands. And the reason I don't short below the bands because it tries to always pop back in. So you see, if I was to chase a short, look, I'd be squeezed, almost 20 points. So the neat thing about the rules are the rules. Let me tell you, quickie little tutorial on the rules. Let me open up my futures chart. Okay. Here are some of my favorite rules. Everyone, grab yourself a pencil. What's my perspective on stop hunts and stop fishing? I think that the market does that. It doesn't know where your stop is. The market, but there are people in the market that do that to stir up illiquid responses. Like an example, if I wanted to buy the dip and I was a really smart fund and I knew that there's a trend line And I know that a bunch of traders are going to line up stop losses above a trend line. When we're near it, I could attack it to force the market to like, you know, or at least attack it to trigger stops and trigger selling. And I can immediately long right there to kick it back up. I don't feel like there's any like dominant force in market making that's designing the market to squeeze people out. Because when you squeeze people out, that's illiquidity, right? Markets move in one direction. And the market makers, the CME group, everyone hates illiquidity. As a matter of fact, liquidity, the more people trading an amount of time is more money they make from the income. They make commissions and fees and all that. So when you squeeze a bunch of people out, you remove their ability. Imagine like if me and you were trading against each other and I never made a profit, neither did you. We're just neutral trades. Every time we trade, we're like taxed $1 to the exchanges and stuff, right? Give or take, you know, the exchange fees, clearing fees. So eventually they whittle away all of our money and put it in their pocket. If you lose your money to another trader, they just got one commission out of you one time. So you got to know the incentive of the people that run the market is not to do that. But I wouldn't take opportunistic hedge funds out of the picture of wanting to do that because they're going to create a moment for themselves to speculatively trade on. So when I hear people talk about, you know, market makers are looking for my stop, I always want to just like, you know, go to their house and punch them with a water balloon. I think it's goofy sayings. But but because no one knows where your stops are anyways. Your stop is on your platform. It's local. Even level 2 doesn't know your stop. But people that do understand patterns could force a stop sweep out. If that makes sense, Bogey. So a fund can say, ooh, this is a double bottom. You know what? I want to create a low for myself. Let me just brute force it and see if I can't trigger something like that. They wouldn't know there's stops lined up there. And even the exchange doesn't know. The level 2 doesn't know, right? A stop loss market order, all it does is it tells your platform that if the bid is below or equal to that level, execute a market order. And then your platform just shoots a market order. The market just sees a market order, right? So there is no knowledge of your stop. Statistically, it can be determined that there's a probability of stops there because of behavioral patterns, but nobody knows. Does that make sense? That's my take on it. Since your stops are on the platform side, nobody can know. Nobody knows where anyone's stops are to even do that. But like I said, patterns. Like, oh, this is the head and shoulders. Let me brute force sell and then flip it forward. Okay. Now some of your brokers may be market makers, like TD Ameritrade. Back in the day, TD Futures was a market maker in the futures industry. And who knows if they bulk data collect from their own platforms. I was always a tinfoil hat wearer on that. So, I'm trading on TD Futures and TD's market making. Oh, there are stops here. Can they advantageously, protect their own interest, knowing what they know about me? Yeah, we're like braced below a really large low. Yeah. Because I think like psychologically, people know that there likely are stops piled up under traditional mechanics, trend lines, higher highs, lower lows, things like that. Okay, here are my rules in futures. 4% of days, statistically, are at the upper region above that top of band. 8% of days, right here, in between the two bands, and 8% of days below. We'll close. It's just general closing stats. So by the end of the day, these bands are price is more likely to stay stable and not be crashing. So because of this, I don't short below the bands ever. This is my rule. No short. If you guys want to write this down, this is from our classes. I don't short below the band because it has a higher probability of being above. There's very few days that crash and keep crashing over the history of all days. I long only on these following pivots: MHP, bull zone bottoms, bear zone tops, and DD's greater. And this last one is DD's greater than half. So we want to see a bear zone break, and clearly it's not. It's getting worse. Okay, so because of that, I'm usually sitting out. Okay, I'm mostly sitting out. Okay, which is great because I'm gonna go back and chill and relax all day. All right, above the bands, again, I don't short for the same reason. right? Sorry. I don't short for a different reason. When I say the same reason, I don't short, even though one may say, aha, but huge probability it comes back down. Very true. The problem is I don't short bull markets, and that's one of the things I don't do. I only short under certain circumstances, and nothing up here qualifies. The only times I do short is off of this upper band when this ratio is less than half, which would be great. Like if this goes here today, that's the perfect short setup. I short off MHP, which is this orange line right there. And they short off a bear zone top, which is that one right there. And I'll show you where those are in a little bit. And I only short off of this one and this one when that ratio is less than half. So no short up here. And again, long only, which seems kind of interesting because it's the same rules as down here. They're literally the same rules. So what you see is that I'm always predispositioned to bet that a bear market pops back into the safety zone and that a bull market keeps going, which is statistically what you see. I never bet on a crash market to continue to crash. I rather sit out and laugh at people who are blowing up their accounts and saying, I remember when I was there, old sport. I remember when I was a kid too. I won't do that same shit. What I'm going to do when it's crashing is I got all my money in my pocket to literally 20x my net worth when a bear market dips and turns around. I love doing that. Too many ads on my YouTube? Yeah, I have no idea how to change it. I'll try to fix that, okay? So I only long down here. In the middle, I follow liquidity map and I don't short here. And again, when it does tuck in, bull markets that go like this, you don't know how high they go before they tuck in. Usually a bull market doesn't find resistance and I don't like to bet on it. So down here I long only, up here I long only. And those are the rules inside of here. This ratio being less than half, I will long up the lower DD band, but with a medium-sized trade only. Okay, that's it. When this number is greater than half, I long with it with a normal, like a bigger trade. So, that's kind of the rule here. So there is long pressure here, but it's going to be fighting short pressure. So today the market's going to move up a little higher and then probably likely at some point find some more selling. So there, like I said, there is no shorting down in here. That's the correct call. And I'm doing that, practicing what I preach. These are our rules from our class. And like you said, the S&P is going to find up and touch that half gap. Let's see what happens when we get there. I'm just going to play by play this. This isn't the reversal day we were looking for. All the signs to point against it. QQQ still outside of the bands. SPY tucking right back in. So like I drew earlier with this one, now liquidity maps, right? So res is good. So the S&P is actually looking to move this way. Like I drew earlier, the ideal setup is to short the upper bear target right here. 580 SPY is resistance. If this enough isn't resistance as well. So either here or here, the market's going to turn around. Likely. Okay, so let's look at the greater market. So the question is, do I want to short upper bear zone? I might. That's what I'm going to wait for. Greater market, okay? You still have a little bit. SPY greater than MHP, which is good. This is one of our three rules to see if the market's bullish or bearish. So this is bullish. That's good. DD ratio less than half, though. Means the stocks aren't so good. And then monthly maps. Let's look at those really quick. This is the 6-month outlook for S&P. I just click one button in Rocket Scooter. Calculates it for me. And we'll see if the monthly maps look absolutely horrid. Like this is the worst I've seen it in 2 years. It has never looked this bad. Now, the way you analyze this is that you're looking at the bottom of these bull zones. If the bottom is sloping up, then it means bulls are liquidating. Okay. If the top of the light gray zones are also sloping up, which they kind of are, it means people are shorting at the same time. This is more like an illiquid market to the downside, which means markets may pop, but they're still selling. And this is showing you time. So this is brutal all the way through February. This could be another month of this. And it doesn't mean the market's going to fall straight down. It just means that the volatility is going to be here to stay, at least through expiration. So for the rest of this week, VVIX ain't coming down. So the market is likely to have periods of just straight up, straight down, V-chop. It's going to be a miserable time to trade, at least for the next month. So, you know, monthly maps not showing anything good. So when 1 out of the 3 are bullish, I'm still somewhat bull-minded, which is why today, on top of everything, I'm not shorting because I have my short pivot down here. But I'm also not debating the fact that there can be a slight upward push on that S&P trail in the stocks. So if the stocks are filling their gaps, the S&P is likely to fill its gap as well. But it's going to fight right here and have resistance. Yeah, I short against MHP from the bottom, and I short against bull zone top, bear zone tops from the bottom. This ratio is bearish enough that that short setup is a really good one. That's it. So the target, as you see on bear long down, is up here to the midpoint between here and blue. So that is literally 575. So this to this is a possible leg, which is 5 points with roughly a 10-point stop. This is a 5-to-1 setup to go from here to there. Yeah. Yeah, 58.63 overnight. Yeah, so I try to take a long right here on the push, which is what I do is I wait for the confirmation that we get a bull push, right? And so I actually longed right here and then I bailed right there. And again, that's what I do. I take a stab and I bail, and then the market continues to move down and I'm like, okay, I wait for another time. Are there bull and bear zones on futures? We don't calculate them. Liquidity maps are for equities. Futures options are too illiquid and they don't really paint a good picture. You don't get enough liquidity to really see it. That's why we do in equities, but it pivots the same place. So where SPY will move, futures will trip. So we look at SPY because that's what the futures are going to do. So SPY is a complete mirror of futures. I called it. Yeah, I mean, like, it did go the direction I called. And a lot, like, you'll see me do this a lot too. You'll see me nail it. I tell you, and I'm like, this is what it's going to do. And it does it, and I don't trade on it because I still only trade on the rules I have. I like to not lose money, and I like to not play the card, you know, if I don't like what I see. So, like I said, I'm a moment of pushing the button. This is likely not to rally further than that bear zone. So today, unless this ratio heals itself, we're trading back down. Them's the rules, baby. That's it. Which kind of is like, you know, in crappy months, you know, I'm not doing as much, but I'm not losing a lot either. So the goal is just to like walk away with all your money. Trust me, you know, you guys remember me posting those 10K and 50K, 30K day, a lot of those, right? All my apexes would make, you know, like 2, 3K, and it would add up to like, you know, 40K or something. I'm not necessarily able to do that in this environment. There's too much volatility. So it's better to conserve. And then when the market's back to stable, boom, hit it hard. You know what I'm saying? So it's neat. Like, I've gotten pretty good at calling most of the moves, even if I don't want to make them. And it's like, why didn't you do it? It's just because, like, you know, I know the stats in my head and I'm like, it's still not worth the risk. And so, like, you might know that somebody counts cards playing blackjack, right? They have the same superpower. They're like, I think, like, I got like a 60% chance of getting a jack. Well, you should bet on it. You know what? I'm going to get a better hand next time. I even though it's okay odds, you know, I'm not feeling it still. You got rules, you know, you have your own rules. You may decide that you need 70% before you're going to put the money down. So rules is rules, baby. I appreciate you guys showing up every day, man. We have new faces every day. Like I said, you guys will witness magic when you watch this channel. I feel like magic mindsets more than anything. And I can't wait to get my voice fully back, which would be good. So I think ETF still has their 90% off sale going on for like a few more days. Don't forget to capitalize on that. If If you guys are using trader funding programs, you can't beat like 20% off or 90% off. What I think of Fibonacci. He was a great mathematician. I mean, if you ask me anything about Fibonacci as an indicator, I don't stuff like that doesn't work much in the new modern era of trading. So yeah, that little pop, short-lived. Nasdaq tapped the steady band, still trending back down. Spicel also probably doing the same. As you can see, today is not the day that we go up here. I've been doing this long enough to know that the only day that we're going to get that even possibly could rally is going to be off of one of the major news days we have this week. A lot of news coming out this week, and you're going to see that the market's going to be like trending down overnight or something, and then CPI comes out and then it moves. Okay. Or the market's going to move and then all of a sudden PPI happens and it's like wonk, and then wonk. The reversal is going to be a sweep reversal type trade. There's not going to be very rarely is it just going to go and you'll miss out. So essentially what's going to happen is markets like this, if they do reverse, it's usually the worst day that turns into the green day. You'll see a lot of times, and again, this is what I'm expecting. This is what high VVIX environments do. Where is that? Where did my little thinkorswim chart go? What the heck, man? I think it's just zapped somewhere else. Let me do hourly chart here. Hit that like button, people. You will notice that yeah, I mean, this volatility is just all over the place. Yeah, usually you will see that, like, at least I can't. Let's reload my environment here. Oh, there it is. Okay. Cool beans. All right, let's put the bad boy up here. All right. So, unfortunately, as old Ben would say, this is not the bull market you're looking for. Not yet. Not yet. You trust Mr. Kenobi. All right, so when you look at this, again, it could reverse, but no signals are there today. It's usually an event. It's usually like the worst day that turns the market around. Like lower lows that ends up turning green. Yeah, you can see a lot of that. So I'm looking for like here, right? A red day that flips green and then retests and doesn't fail lows, then it reverses. So I'm looking for something like that. And usually it takes an event to change everybody's mind in like that one single day. Like this day probably news, this day probably news. So again, move. The market dipped and then shot back up. So a lot of times the reversal, not to say it has to do that, but a lot of times in high volatile environments, it's usually a volatile, crazy day that reverses from a lower low and then turns up. So I'm looking for like this, like you like the market's crash. Everybody wakes up like, oh my God, it's crashing. And by the end of the day, it's green. So we need signs. And a lot of times you either don't get the signs in the market analysis aren't there, or you get a catalyst or something that gives you the move. And so when I look on the chart, I tell myself it'd be very rare for this Monday that's got no news coming up to really be the day that does it. We have PPI tomorrow, CPI the next day, right? We got retail sales, core retail sales on Thursday. This all has everything. It's all markets super sensitive to inflation. These are all going to talk about how inflation's hurting or helping the economy, right? Housing starts. You got a loss of building permits. The housing market is in complete shambles right now. So, are we going to see shit housing starts again? As you know, we're not building new houses. New constructions have been down over the last 3 prints. The housing market is slightly damaged right now because the high interest rates and the high principals. I think I was reading like Horton Homes posted like one of their worst losses this quarter they've ever had kind of thing. And it's just because, People built a lot on this bull market. They built a lot off of, post-COVID surplus. Once everybody got their materials back in, the inflationary world allowed people to expand very quickly, but yet the customers can't buy the thing because lenders aren't necessarily giving out loans as easily. And the thing is, I think is hurting it the most is people lived off their savings during COVID. So nobody has a down payment for a house anymore. So nobody's got their 20%. So when you add the high taxes on top of the high interest rate relative to, 2021, if you locked in at 2% or whatever, you're great. But now, you're sitting, 6%, 7%, 8% is likely where it's going. People are kind of adamant on not doing that. And then you have your mortgage insurance because you don't have your 20%. It's very expensive to buy a house right now. So no one's doing it. And because Airbnb, a lot of cities have lifted or created regulation change on Airbnbs, where a lot of the existing houses that people invested in to rent out no longer can run their business. So the market's been flooded with used inventory that's competing with the new inventory that's been kind of expensive to build. So your housing starts are pretty negative. So obviously, you can expect, again, not a good read on this guy going forward. This is the number of new constructions underway. We've had 1, 2, 3 months of down, and that's a big catalyst too, big event. Big event can be a catalyst. So a lot of things coming up that are going to move the market. Typically, it's not like a light, easy, news-free day that becomes the day that everyone rallies for some reason, unless they're getting out of the way of some good news that's to come out. So an example is if tomorrow's PPI was going to be good and someone knew about it, they're closing their shorts now, right? Get out of the way. And then when the good news happens, the market continues to sell. So you'll likely see that if today's rallies today, it's going to fall on good news tomorrow. So that happens a lot of time too. Who else's home insurance go up a significant amount recently? Oh, really? We just got insurance on the new house. We just got a new house. So I'll let you know if mine goes up eventually. I think mortgage rates come down this year. They will not come down this year. They won't come down for a while. All the correlations that go into mortgage rates point up, which is normal. This mortgage rate is still relatively low compared to what it's been like from our parents' lifetime. It's just not like 2021 lows, right? If the demand for houses come down, the rate will come down though. That is the one thing that can help the mortgage rate. So let me start over. If the demand, so mortgage rates correlate very heavily with the supply and demand of houses. If the demand is really high, rates go up. That's a normal correlation. So let me tell you a couple of things. So right now the rate is still, and let me come on to zoom in a little further here. We did an analysis on the stream when I bought my house, and I locked my house in right at about 5 and some change. And I'm glad that I did, because it's a whole point higher. I think it was like, hold on. Yeah, yeah, we locked in somewhere back in here. It was, we bought some points down, but basically we locked it in, thinking it was going to trend up. And I think that was a good choice because, it's still kind of looking like it's going higher, unfortunately. So a couple other factors that go into that. I had this website I pulled up. So inflation influences how lenders set their mortgage rate, very much so. Consumers are likely to borrow more during periods of economic growth, which often leads to higher interest rates. So the higher borrowing makes the rates go up. The more people that borrow, the more diversified your risk is. So like if periods of economic growth, lenders are more likely to lend out to lesser and lesser prime candidates, like leading towards subprime and such. So because the risk is higher, rates tend to go up slightly, just because that's part of the way that it works. A couple more pieces. Let me get back to here. another good correlating thing. Mortgage rates can be impacted by the federal funds rate. It's a lesser correlation, but it's still a correlation. So they more likely correlate with Let me go here really quick. With treasury, they usually mirror that. So let me go to let me see the exact. Yeah. So if the yields go up in bonds, the mortgage rates go up, and that's why I keep saying that the mortgage rate is. So you have two factors that compete with each other. The lack of demand in houses, like the new starts are showing lack of demand, is going to have some downward pressure on the rate because less people want to buy houses. So banks need to incentivize churning that inventory to like their prime borrowers, but also because the 30-year and other treasury notes are down so much, the yields are way up. The other part of that, like the ZB, which is the 30-year fixed treasury bond futures yield. So when the price goes down, the yields go inverse. So the yield is at a over 2-year high right now. So this pulling back, as people are shifting money into fixed income, is going to correlate very heavily with a pressure to push the rates up. So while the demand for houses is down, the mirroring of this is up. So, chances are for the interest rates to go down, you would need to be in a different kind of environment, a different kind of market. So my decision was that the rates may not go up, but they're definitely not coming down. And that was my decision. And I made, when we locked in back in like November, that was my decision, was that the rates weren't going to come down. And I think like the daily rate has moved a little bit. I mean, had I locked in, maybe there's like a point of variance that you could have got lucky in here. But basically when I made the decision, January, wait a minute, where's the, yeah. Oh, I'm sorry, here it is. I'm all like, this goes back to 2022. So when I made the decision and like back in here was that the rates weren't going to come down. And I think like they moved just a little tiny bit and went right back up. So yeah, there's not, that's unfortunate, right? That's kind of the environment we're in now. Yeah, the risk intervals has slightly changed like a fraction of a point. So NASDAQ and S&P are slightly different. All right, let's go back and check the market, baby. See if I got a good setup here. Yeah, there's just that short pressure off a half gap, pulling back down. Not chasing that bull up, not doing anything, letting this market do. This is not a good setup to take. Oh, all right. So you have any questions for me? Because typically we just kind of like try to read on the market. I got a short setup at the bear zone top. It is if somehow it pushes up, I'm definitely gonna take a short on that. On the S&P futures, looking good. Like I said, I can just tell the market's gonna be noisy, choppy, no good trend. A little short-lived here. If you're doing anything, you're just gambling at this point. I do want to see this move right here. I'm gonna wait all day. I'm gonna set my alarm and do this, and until then, I'm gonna go relax. So a rocket screw. You can do a liquidity map on so any treasury bond that has any ETF or ETN that follows a treasury bond like the TLT, you can calculate liquidity map on. So like, the treasury bonds tend to mirror each other slightly. So, you can use any ETF to kind of get a feel for it. And today, the bond has the TLT has no upward pressure. It has resistance from here, right? Opening middle, closing middle. So it's just flat, choppy, and noisy. There's not a lot of momentum. If the note was going up, it'd be good as a mirror on that, but yeah. Simon Dean. Yeah, so how does the bears show? So that's the one thing I teach people is that one of our strategies has conflicting rules. There is only one conflict in the rule set, but it's unavoidable. So what do I do when the market approaches bear zone top from above? There's a conflict. The conflict arises when the DD ratio is less than half. Only when you approach from above does this conflict arise, because we have two rules that say two different things. Okay. I long from here to there every single time, no matter what this is. But the DD ratio less, or actually it applies, let me say, I guess it applies both sides, because I'm not thinking about it. It applies, I'm still groggy. It applies both directions. So when you touch the top from either side, whether it's above or below. So let me share, because there is no short, when you approach it from the top, I long every single time. But what happens if you approach it from the bottom? That's the real question. When the ratio is less than half, I short. That's my rule. But also, when it gets to here, I long it to there every single time as well. That is the rule. The every single time trade is created from mostly the desire for the market to bounce off a bear zone, at least test liquidity at the bull zone, even if it's not bullish. If the DD ratio is greater than half, I hit it hard. If it's less than half, I hit that long with the smaller position. So both rules, one of the rules says to long, one of the rules says to short. So which one wins? So what I usually do is I usually long. But the thing is that when you open below it and the DD ratio is significantly less than half, that's when I take the short. So as we approach it to here, I'm willing to take the short, knowing that the every single time long setup allows the short maybe to pop to there before it comes back down. So this one particular short, to handle that conflict, it's the idea that because both legs are likely to take off, and this is a volatile environment, I will short from here with the smaller position, let it hit here, maybe short again, and put my stop up there to build a second entry around the idea that I can actually bet on that, because DD ratio less than half, it's likely to stay in the same zone it started in. That's the rule. Great question. Do I deal with the Jax level? No, I don't. Our stuff is better than Jax. Monthly hedge pressure is what Jax wants to be when it grows up. But I never short above MHP. That's not true. That's not true at all. I short bear zone top and upper DD band as well, under any condition. How come resilience for SPY is positive on the NQ indicator but negative on the ES indicator? Resilience. No. Each indicator is different. This is not resilience for SPY. This is resilience for S&P. This is resilience for NASDAQ. I just show both of them. My little pencil is frozen. There we go. So yeah, so an environment like this, because it's volatile, you can also have the market, do that and then do that. So the question is, while this is a good short, it can pop against you a lot of the times. And so I'm usually very I need to be very convinced to short at the top. Yeah, tech is just getting nuked today. And, while the S&P is chopping all over the place, not worth me trying to figure out and guess. So what I'm going to do is I'm going to wait for this and then aim to play that play right there. It's a really good setup. +1 for the COTR analysis. All right. Trust me, when it comes back to being a nice bull market, oh baby, you guys are gonna see how good I really am at this. The new tariffs, the territorial ambitions in the north on the horizon. Does it make sense that the monthly looks bearish? Yeah, I think there's some uncertainty there. I think a lot of this market does come from the lack of transparency in the Fed. Have they been kind of leading us on for the last couple of years that they were going to be a little more lenient and aggressive on rate cuts, and the fact that they, pulled the rug and revealed their true intentions after the election was over was really disheartening to see that the Fed was as corrupt as get all. And that was what I think shocked a lot of Wall Street, is that they don't have any faith anymore. That the majority, or I guess a large portion of the FOMC participants were literally batting for the Democratic Party to try to make the stock market look as good as it could leading into the election. And immediately after the election was over, that somehow they magically changed their mind about how they wanted to raise the rates. The majority of, if you look at the dot plot, I can say it counted at least like 8 dots that rapidly shifted at least 50 to 100 basis points lower than the previous month's thought. Nobody changes their mind that drastically from one month to the next. Now, the argument is, well, they're like, well, we think that because of Trump's administration that our policy should be different. But it's kind of like, that's not a good excuse. You didn't change your mind that drastically because Trump got elected. You only led us to believe that you needed to do that in favor of politically. Like, it was not done. So, it was not done based on economic data. That's kind of the sad part. He may face a lot of people said Apex was down, Trade of 8 was down. So I haven't done any trades yet, so I don't know. I'm a little nervous to touch it. But yep, so today is not the bull market you're looking for, unfortunately. All signs are still garbage. But what's great about garbage is I don't have to pick any up off the street. The market's garbage. And guess what? Another sell day, another sell day. I'm going to be prime front and center. Dude, whenever everyone gets so comfortable shorting, so I'm the first pullback to the party, and my first trade back, I'm going to make $100,000. Watch this. I'll put all these gurus to shame. I'm watching gurus right now post on their Twitters and social media about the 2 or 3 grand they've made today. Dude, this is baby trades. Baby trades. Don't play in the bear. Don't pick up pennies in front of a steamroller. That's my rule. What I scalp $1,000. I don't need $1,000 bucks. I don't need any of that money. I don't care about this. I'm daddy's getting a big trade. Sell-offs and bear markets only happen like very seldomly. The opportunity is to catch the reversal, not the scalp on the way down. Been doing this while. What's the longest streak you set out? During COVID, I think I set out for a total of 3 straight weeks during COVID on the sell-off. Like circuit breakers, I wake up, the market's in pandemonium. I'm just watching. So it doesn't mean like I don't trade, like unless there's a trading day, then obviously I'll take out. But right now, liquidity maps, see how they all point down, okay? You know, kind of like not getting upper momentum. The only trade I'd take would be to short from there. So as you see, liquidity map is right. The direction's right. My speculation's right. I'm just waiting for my entry to do anything, but yeah, I didn't do it. Ads every 5 minutes? Are you kidding me? What the fuck? I don't know how to change that. Let me make sure I go. Is it really like every 5 minutes? Oh, YouTube has like let YouTube insert mid rolls for you recommended. They changed this on me. Okay. Let me unclick that. Choose how mid rolls appear. It does not let me turn it off. Okay. Wow. Okay. Insert mid-roll ads. Okay, well, I'm not doing this. YouTube has changed this setting, apparently. All these things are choose how. Okay, schedule mid-roll ads at a set frequency. How can I turn these things off? Oh my God. Place ads during specific moments of your live stream. Set them manually, because that's what I'm going to do. And not send any. Okay, here we go. I'm going to set it to manually and click save. Now I have the power. I can click a button to insert an ad. There shouldn't be any more ads now. 3 of them hit you. Oh God, how annoying. Thank you for telling me that. Trust me, I'm not YouTubing to make money off of YouTube. That's for sure. I don't need no ad revenue. It pays me like $5 a stream. Yes, sir. No, I don't need that. I don't need that nonsense. Have I heard of the Wealth 365 online summit? No, I haven't. What is that? What is Wealth 365? Market being dumb, Matt losing nothing. So what you guys will learn, especially those of you that are like not full-time day trading, the best thing about markets like this is to set an alarm. Like if you're like, okay, whatever you want to do, like for me, I'd love to see a nice clean bull breakout, or I'd like to see something like I'm going to set my alarm, alert in my platform. Thinkorswim has mobile alerts. I'll set an alert that if we break above here, it's going to notify me to come back to my computer and I can make a decision. Other than that, these are the times that it's good to just go about your daily life, forget about the market, forget about what you're looking at, and go live life, go touch grass. You know, today I didn't get tricked on the bull up. I didn't chase anything. Markets still, liquidity maps are still rock solid about that direction. I don't ever argue with them. Here's hook number 2. MHP to HP. There's that red, orange to blue. Go touch snow. Yeah, go touch something. Go touch snow. Go touch grass. Go touch fire if you're California. Too soon. That's a bad joke. Sad what's going on out there. I have seen like reels people have made of like celebrity houses that have been demolished, like from the fires. It's crazy. It's really bad out there. There's in here we don't have alerts set yet in Rocket Scooter. I use mobile app on Thinkorswim to set an alert in my Thinkorswim platform. We don't have a mobile app yet. Experiment. The summit is specifically designed to make sure you have the most cutting edge tools, techniques, strategies you're trading, investing. Kick off 2025. Right? Who hosted Apex, like the trader funding program Apex? Wealth 365. I don't know about these things. Who runs this? Speakers. Oh, interesting. So they bring out a bunch of industry people. Tradier, Sosnov, James Carville. Interesting. Kevin Harrington. Oh God. Okay. You know what these things are like? These are like, I call them speaker conferences. There's a bunch of people that make all the rounds on all these conferences and get the same peeps. That's cool. I wonder if you have to pay to be a sponsor so that you can speak. I think that's how these things kind of work. Like you pay to have like a... Wait, Neil, are you in here? No way. Where are you at? Neil's the man. Are you speaking? Do you have to pay to be on a panel, or did somebody invite you? Wait, where are you at? There's Daryl. There's Daryl right here. Yep. So the entire Apex is sponsoring this. Is that who? Or Apex is not behind this, but Apex is one of the sponsors, right? Okay. There's Big D. There's a lot of people. Wow. Look at all these people. I know a lot of these folks. Let's find our buddy Neil. Batista. Oh, Batista's there. Apex is down because they hooked up wealth charts. Oh. Dang, this is a lot of speakers. Is that you, Neil? Are you that? Are you that Neil, or is there another Neil? Oh, that's you, Shaspensky. Did I say that wrong? How do you Shaspensky? This is completely Shaspensky. Okay, oh, cool. All right, I was like 90% there. Look at this. This is a handsome fellow there. Cool, brother. What do you? Are you speaking in like a webinar or anything? Dude, this list goes on forever. Wow. It looks like the faces are changing on me. What is going on here? Now the website's going crazy. That's kind of neat. I want to know when Neil's speaking. When he's speaking, I'll attend just to listen to you talk. Why would you take time off 1 week to hear those people talking? It's online. It's an online conference. Look, I've been to enough financial conferences and conferences in general that a lot of it is mostly people selling you something. So it's like a lot of times these trading vendors they'll teach you something, but they're also, pitching their wares or their services. And that's not a bad thing. But it's a lot of it is you know, sponsor type things. Anytime a sponsor type event is, the sponsors are always trying to make a return. Oh, you don't speak at that event anymore. It's a joke. Oh, okay. Okay. So that's not the current speaker panel. That's like the speakers that have been there historically. Somebody just had a nice list of CMs, honey. If you're a regular working class person making less than 60K a year and there was a mat and rocket scooter equivalent for you to use, how would you approach that this year and be, wait, hold on. DJ Boat says, if you were a working class person making less than 60 and there was a mat and rocket scooter equivalent for me to use, how do I approach this year and beyond? So trading while working is one of the hardest things you can do. You have to make time to trade. And so a lot of times, and again, I've known people that do this, they save up their PTO just to take weeks off to trade. But good weeks, like whenever all of our signals are a certain way, you know, it's going to be a good month. You know, we have all the greater bull market and the VIX a certain place, UVIX a certain place, you know, it's going to be a cleaner market. I know people that spend their PTO and take a week or two off and focus on trading to kind of make up some money there. Or if you don't have that ability to trade from your phone at a time that makes sense, you have some people rearrange their work schedule so they can have an hour or two in the mornings, and that's what you do. And only, one trade a day was kind of designed for the working class people. Well, I only do pretty much one, maybe two trades a day. Day trading scalping is for people that can sit at home all day and watch it. If you can't, one of the rules is never trade when you have a big important meeting or presentation you need to focus on. People know that you're not paying attention. So the last thing you ever want to do is jeopardize your actual source of income to come gamble in the stock market. So if you have like a work meeting, don't trade that day. Don't even look, don't even engage. If you do make a trade, make sure you have planned your trade out, that you automate all of it so that you don't have to pay attention to it. Set your entry on a limit, set your stop, set your exit, all of it there. Then set it and forget it, and don't pay attention to it while it's going. Commit to it. You're either going to make the loss or make the win. That's what you do when you're working. So you usually are going to wait for that perfect bounce somewhere. You have a limit order sitting there, and then just let it ride. Somebody said, why is Pat Weiland not invited, or Rips? Yeah, I don't think they sell anything. I think honestly, events like that are sponsored. I don't know if it's invite for the most part. Like I've been invited to speak at symposiums and conferences all the time. And most of the invite is, hey, we'd like for you to come speak. And I usually don't say, oh, cool, when do I start? I usually say, how much to sponsor? Because I know the question. And they usually, oh, here's our sponsor sheet. If you want to speak for 5 minutes on a panel, it's a $1,000. If you want to have your own 30-minute webinar, it's $8,000. If you want to have a booth at the conference, it's $15,000. Which one do you want? So the invitation usually is the conference asking you for money as a sponsor, and then you get to speak depending on the tier you buy. So a couple of times I've been invited to speak at symposiums and stuff that were just like educational for the sake of. I was a guest at the International Society of Charting. I can't remember. It was a European, like, how here we have like the CMT, I guess in the United States, charting market technician or whatever. Europe has a similar one. It's their version of CMT. I don't forget what it's called, but it's the same thing, but in Europe. I actually invited to speak and give a symposium and presentation there on liquidity analysis. And they just wanted me on. And that was like one of the rare times someone's like, hey, we want you to come speak in front of everybody that, all of our society members. So that was kind of cool. I was also invited to speak at my university in an entrepreneurial class in front of a huge room full of people. That was kind of cool. But usually conferences are usually like, they want you to sponsor it. Like the FinTwit conference, when they had it, before it all fell apart, they were like, Matt, we'd love for you to come sponsor or come be part of it. And once you come speak, we're going to give you like an hour to talk. And I was like, how much? Oh, well, it's $8,000. Oh yeah, that makes sense. And so essentially it's like most of the speakers are just people that paid for the ad space basically. And then you kind of walk into a big shady FinTwit commercial for trade rooms and trade books and indicators. And it's kind of like, it's like going to a holistic, like farmer's market or something. Everybody there's got a booth selling something. Crystals, potions, tie-dye t-shirts, you know, hair bun ties, yoga mats, thing. Everyone got something for sale. But yeah, as Neil has said, you've invited and spoke at different universities. Oh God, it's so much fun to speak at a university. This is my first time to do it. I spoke at the University of Houston for the senior entrepreneurial. It was some entrepreneurial class, general entrepreneurship, and I spoke as a person that went to the university and got a degree and then started multiple businesses. And I just told my story. That was actually really fun. It wasn't about trading. It was very little. But then afterwards, people were like coming up to me. All these kids were like, yo, I got a Robinhood account. Yeah. Like, and they're like, I started day trading the other day. And I was like, oh, I got a YouTube show you can watch out. They're like, oh, yo, you're on YouTube. That's awesome. So it's cool how much trading has actually become something that young people do. When we were young, we didn't trade. We didn't trade in college. You were trading apps on your Nokia phone. Come on now. Your phone didn't even have color. It was like a little brick phone. So now, like, most kids in university are picking up day trading. It's kind of nice. One person was like, yeah, I've seen you on YouTube before. It's kind of cool that you're here. I was like, that's cool. You recognized me. Yeah, Neil's very, very intelligent. I'd love to hear him speak whenever he goes to speak. Eunice says, and scalping really consumes your soul if you don't have defined risk and proper shot. It really kind of does. And you see how right now the market's choppy and volatile. I thought it's going down, it's going up. See, the idea that I don't have a good grasp on which direction it's going to go is also why these rules allow me to sit out, because if I would have shorted, I just got chopped. So the idea is that these rules I don't really have a lot of confidence in which direction it's going to go. And so I only bet when things are good. And you know, there's only a way to maintain a really high win rate like I do is to only trade when it matters. So I mentioned Thinkorswim for alerting, which alerts you configure there. Oh, so if you right click the chart with your mouse, I think you can set alert, or on your phone. You can go at the bottom. There's icons at the bottom. One of them says alerts. And you can set an alert for whatever stock or features that you're watching. Yeah, so on Wednesday, there's a new VIX contract. So when we roll over on VIX, let's talk about that. We're going to look at the VIX right now and see if we're in contango or not. It's probably contango for sure. In this kind of environment, I think we would be there. So right now, the VIX January is at 1949. That's March, right? January. J. I always get my letter codes wrong. That's April. Nope, hold on. Wait, I went backwards. D is January. Right now. F is January, sorry, F. G or H is February. Oh, it's G. 19.6, and we're currently trading 19.5. So you're going to be roughly at triple B. So what's neat about knowing that is that when you roll into the new contract, you're going to know within a day if you're still going to have the same environment or not. A lot of times when the VIX has contango of like, a whole point or two, it takes one, maybe week or so for it to test that level before it breaks down. When the forward curve is relatively flat like it is right now, which is really good. It's not good for the market, but it's good for you as a trader, because if we roll into new contract, we close here and we're going to open right there, wherever it is. Triple B is going to be right in the middle. And so you'll know within a day if VIX is going to move it or not. So essentially, in this time, when the forward curve is flat, when you roll into a new month, you almost know the quality of the month the minute it starts, which is kind of nice. And again, if VIX completely punches through and keeps going, then the quality of the month is going to be like, well, we have another bad month again. It won't take a week of lingering till it figures it out. You need some lemon honey. Yeah, I'm going to go make some of that for iDoc. She's really sick right now. I'm sick. She's sick. She just got home this morning. Yep. All right. So in S&P, I'm looking for my upper target up here. Yeah. Oh no, she goes to Hawaii on Friday. She went to California for a week. Raul, I don't trade the SPY. I trade ES. But I look for clues for my ES pivots in multiple places. I have indicators for both. They're different indications. I have indicators for both futures, which are here on the chart, and they have indicators for SPY, which are here on the chart. And both of them provide evidence of like what's going on. But I'm not trading the SPY. So SPY today has a pivot, the same place futures has a pivot. So liquidity maps, because they mirror each other. Does that make sense? Just watch. It's very cool how it happens. So when I execute a trade, you'll get to see it. So what I would do right now was, if I was looking at Thinkorswim to create an alert, if my alert was to short futures off of SPY liquidity map, that I would set an alert to alert me like maybe right at 579 when you break through it, so I know, aha, I need to go pay attention to it. The question is, what is the corresponding level or pivot for ES that you stated for the SPY short? You can't do that. The math of that doesn't make sense because SPY and ES don't trade one for one. So you can't know. There's no way to calculate. So if SPY gets here, it's time that matters. That moment in time, I'm shorting ES wherever it ends up. ES could be 58.54, it could be 58.57, 58.56. You don't know until you get there because they're trading independently. While they are tracking the same index, they're going to trade at different rates. So you never know when you get there the value of what it's going to be. Does that make sense? So, and it doesn't matter what you calculate, because if you did, once it gets there, it wouldn't matter. So there's no, you can't project what the value of S&P futures would be when SPY is a certain value. You can't calculate. Does this make sense why you can't do that? So what you have to do is I watch SPY, and when SPY gets right here, then I go in and short. Yeah, because like if you look at it, the ratio between the two is never 10 to 1. Like SPY is like 58.47. This is 578. Sure, it's like, you know, roughly 1/10 or whatever. But you'll see that if you put a real-time fraction of futures divided by SPY, you would think that it would just be 10, right? But it's like 10.01, and then it ticks again. It's like 10.07, and then it ticks again, 9.92. So they dance around, and because they dance, the further out you project, the bigger the error is when you get there. And that's a problem that you have. So what we train people to do is you watch the futures and you watch that side by side. So like I have another chart on like up here on my screen that I just reloaded my layout because I refreshed it. So I will have my futures loaded up like this. Hey, did the ads stop rolling, by the way? Because I hopefully y'all aren't having to see ads anymore. I have this guy sitting there as well. Futures has a resistance pivot off of the gold. Equities has a resistance pivot right there. So roughly about 1 point away on SPY is the pivot here. So it's going to be roughly 58, 57-ish. But when we get there, it could be off by a couple points. That makes sense. Good job. Raul, does that make sense as well? I'm not trading the SPY. When you are trading futures, we have tricks on finding pivots in multiple places. That is kind of the trick of being a good trader, is to look at multiple avenues. If all this is trading the index, we have a bunch of indicators. I actually look at all the stocks in the S&P in one gulp. I look at all the stocks filling their gaps in one gulp. I look at the distribution of options in SPY to give me a read on SPY, which is here. And then I have those pivots in futures. All of these things tell me everything I need to know to trade S&P futures. And the same thing for NASDAQ. So I'm looking at pivots here, pivots here. They all have different calculations, the best part. So our stuff isn't technical indicators. Our stuff are actual exploits. The calculations that we do in futures are completely different than in equities. So in equities, this is like the options landscape of underneath SPY. It's going to mirror what the index is doing. and the stocks are doing the index, and then the futures are going to mirror that. So they're all going to pivot at the same time. And in futures, we have another calculation we do for futures. So right now, the stocks look bad. The S&P wants to fill its gap, but the stocks are bearish. So what's neat is that, as I said today, is that the market is looking to do this. There's a big resistance off of that. So I'm looking for that to play. And the liquidity map shows me SPY is pulling this way. This indicator, this white one, tells me that SPY is pulling this way. So futures are doing the same mirroring of that. So this green indicator here tells me that this is resistance, this top of this box. This white indicator tells me this is support, the bottom of that box. So while we've kind of just been streaming, we popped up here. We're kind of sitting in the middle of the range. There's nothing. I don't pick and choose trading from the middle. I'm looking to short from 580 SPY, which is roughly 58, 57 plus or minus like 5 points. So somewhere up in there. I'm gonna wait for that. But until then, I'm gonna wait without talking. I need to save my voice. I love you guys. I love streaming every morning. It's the most informative stream. Hopefully you guys have. Y'all come. We're growing rapidly. We've tripled in size the last couple months. But yeah, we drop the knowledge. We actually train you on trading, teach you how this works. You can subscribe to the Rocket Scooter platform. It has a subscription. You can get these indicators as well on this entire trading platform you see on the screen. I'm the guy that built it, actually. And I use it when I trade. I use only it when I trade, and all of our stuff is inside of it. And we have the best trader training program, period, when it comes to risk management. We teach you guys so much stuff in that program. We do live classes every day to go over. There's 20 sessions in the program, and we get to session 20 and we start over and we repeat over and over and over again. So if you come to those classes, they're all part of this. So you subscribe to the platform. It's half price for the first month, so check it out. The link is being posted by the bot. If you scroll up, I'll drop it one more time in chat. If you guys are interested. Like I said, we're growing like crazy. People love our program. Why did I sit out today? Why I made no trades? All of that is part of this risk management. Market's choppy and crazy. Well, I can see that. I can then choose to avoid from the get-go. The link I just typed in is the link. It's 50% off. You can check it out for the first month. And hopefully tomorrow I'll have my voice back. Today's the first day it's partially back, which is good. I was hoarse all weekend. I couldn't even talk.